The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. And good morning to our friends in Australia, and good afternoon to our friends in New Zealand. In particular, hello to Sage. I love Sage for a number of reasons. She's one of our longest-serving members. In fact, she's the third person I ever taught this stuff to. But after all those years, she's so enthusiastic, so interested in talking about trading and actively trading. It's quite wonderful. So there are lots of reasons I love Sage, some of which I better not tell you about in a public place, but her continued enthusiasm is an inspiration to all of us. Kevin, hello to you, my friend, and Marvino Hill in California, Southern California, and Eric, who's also in California. I was talking to Eric the other day. Can you guys all hear me all right? Would you just type in the question box if you can hear me okay? Some of you, any of you? Yes, well, Marv can, and so can Clyde, so that's great. And so can Eric, loud and clear. That's great. Wonderful, and Kevin, great to have you with us. Really interesting day today, for me at least, because I'm going to talk to you almost exclusively about charts and trading, which I love. I guess the only person who's kept up their hang down in Singleton. Hello, mate. How are you? And Dean, good to hear you. I guess I'm the only person who's been keeping up their enthusiasm for trading longer than Sage. But I love trading and I love charts. I'm obsessed with markets and why they do what they do. And I hope over the years I've been able to explain a lot of that to you. And today I'm going to explain more. Some of this today, those of you who've been members for a long time will all know about. But we have a good lot of new members coming in all the time. And some of you, Clyde, 1987 trader. Good on you, mate. Wonderful. That's terrific. And anyway, let's get started. The theory says that, let me see what the theory says, make sure all of this is working as it should. I'll get to the audience view so I can see what you're going to be seeing. Right, here we are, that's great. And look at all these lovely people who are joining us today. Lots of old friends, as usual. Appreciate you very much. Akshay's with us. Alan just done a tutorial. Alan Varian did tutorial in New Zealand. He's the guy who talked me into coming to live here in Talai. Very nice place I found too. Alan, thank you. Albert, Alex, lots of people. Chris A is doing a tutorial at the moment. Webby, King of the Black Lines, been a long time member of ours. Loves the black lines on the Daniel Code charts. Dean and Eric, another Eric. Hank, I said g'day to. Jan, Jonkhart, new, great, nice to have you with us. Jay, Jays with a plural. John Chiwa's member, nice to have you with us. Justin, Hank's son, going to be a very good trader. I haven't heard from you guys for a long time. Better tell me what's happening. Lloyd, up in Canada. Lloyd's about to start a tutorial next week. Manish in India, just in the process of working through a tutorial, as is Mark. Michael Peel will be hidden away in South America or West Australia or somewhere obscure. But Michael, great to have your support as always. Mr. Mike Murph, he's a tutorial guy. Great to have you all with us. Lovely to see you all. Terry, of course, you down in Melbourne, Terry Roberts, and Tom, my wealth fund manager friend from Florida. He's a great supporter. Great to have you with us. Vicky Butterworth. Happy to say hello to Vicky. Always love saying hello to the ladies. You know, we don't have very many ladies at all that trade, which is sort of kind of strange, isn't it? Because how cultures differ across the world. In Japan, the Forex traders, about 86% of them are women. But we don't have a lot of lady traders. Well, we certainly don't at our site. Anyway, let's move on, folks. I've got a lot to tell you today, and I'm just going to give you a quick run through of what we actually do at the website, because most of it's hidden from you, so you don't get to see it unless you're a member, and even if you're a member, you might get to see some parts of it and not see others. Bill Ford just arrived. Hello, Bill. Good to have you with us again, mate. And even if you remember, you may not be seeing all of this. The first and I think the most important thing we do is we publish these members charts that you can see here. This is a very different view of markets. These red lines and blue lines you see on these charts are Daniel code numbers, and they come from a quite unique ratio. They are not old highs and old lows. They are definitely nothing to do with fibs, which those of you who know about fibs will understand that they are a code defined by a Greek mathematician called Fibonacci, who lived in about 1200 AD, and he came up with this Fibonacci ratio to show the optimum breeding rate of rabbits. And if you'd like to know more about that, I'll tell you one day. But that's in fact what Fibonacci ratio was originally. So they're none of those things. They're completely unique, and they're created. They're percentages of previous ranges and previous swings. These members charts, we do them for 9 Forex pairs and 11 futures pairs, and I keep all of the others. There's another 20 or so that I do have charts for that are not published on the website, and these charts are updated twice a week. And you'll see that they're quite unique. Look at this one here. This happens to be T-bonds, and you can see we had a key reversal bar yesterday right at the black line, the blue line rather, at 154.25. For the benefit of those of you who understand the black line like Webby does, the black line is the only line of the retracements that acts a bit differently than the others. For it to be broken, it has to have a close above it. And if that happens, there's a very high probability that the swing's going to go. That may not mean a lot to you given how close it is to the old swing, but it has real implications for trend. And of course, we had that sell today, which was elected. As you might see on a later chart. I did some of these charts yesterday because it takes quite a lot of work to get all these ready for you. And it's quite amazing how these markets turn at the Daniel code numbers. In fact, I go so far as to say that all markets turn at the Daniel code numbers and only turn at the Daniel code numbers. Okay, let's move on. The next thing we do is we publish daily trade signals for you. This is a group of them, and they come in different types of signals. There are TO3 signals, which are basically price with a small dash of time included. Our blue line signals, they're the ones that are reacting to the Daniel code blue lines. The daily buys and the daily sells are more continuation signals. And then we have inside bar, buy and sell. Important that you know what these various signals are, because with the inside bars in particular, if they're not elected, the inside bars are a null or a void, and you carry forward the last signal. And our website, which is very simple in technical terms, I can't code, I can barely use a computer. So our website's not terribly technically advanced, and that's because that's not a high priority to me, which I guess is all a bit old-fashioned, but that's not where you make the money. You make the money by knowing the signals and particularly being able to determine if you stay with the trades or not. This next page you see, I know it's very hard to see. My children are both at university today, so they were unable to help me with that clever stuff they do of capturing a web page. So I've done the best I can, and it's very hard to see. I understand that. But this is the Daniel Code Trade Program, and it tells you what and where. So it takes the signal, this would have been for yesterday, and it tells you what's the market, whether it's a buy or a sell signal today, where you enter, where you put your stop, a small first target if it has it, This is really an element if you're trading a counter trend. It tells you whether this market's correlated with other markets, because if it is with correlated markets, you've essentially got a proportion of your trade is the same trade both ways, and you need to cut down your exposure to correlated markets. It does all that for you. You can actually go to this program, type in your account size, the risk you want to take. It'll actually tell you how many contracts you should be taking based on your account size and your risk profile. Once you've got those things, once you've got your charts and you've got your signals and what have you, this next chart is called putting it together. This happens to be T-bonds. As you'll see, we had a sell today on T-bonds, which was elected. And I've started this trade. Let me bring up another version of it so I can talk to you without going over it. And we've started this trade way back here down at this low, low, which is, if you want to look at it on your chart, it's 10:06, October the 6th. And it doesn't really look like it's set up a blue line trade, does it? But it has, and it set it up from the previous bar. And even at this bar, where the arrow is pointing, the last down bar, there's 5 ticks variance in that. The low of this bar is actually 151.07 against a blue line at 151.02. That's 5 ticks variance. And at that number, if you recall, there are 32 ticks in each point. You're talking about a variance of 5 ticks out of a possible 4,834 if you convert that 151 carat 2 number, that little arrowhead sticking up, the old-fashioned symbol that CBOT uses for its markets. Even though they've merged with the CME, they haven't changed how they price their markets. They use this carat symbol on bonds, on the grains, on a lot of their markets. So that's actually just less than it's a fraction more than 0.1% variance, which is within what we allow. So that set up the blue line trade. Up it went, and you can see where it went to. It went straight up to the red line. Let me get my highlighter here so you can follow all of this spotlight, they call it, don't they? Here it is. Up it went into this high here, and that gave you your Daniel code target recognition. Most important, the high of that bar is 154.05 against the Daniel code retracement 154.04. So that's nearly perfect target recognition. All the other requirements are in place, and that created a TO3 sell signal, which was posted in the website for you. Down it went accordingly. This is a very nice piece of trading here because there's no counter trends to worry too much about. And then you had on this last bar here, we ran down. This is potentially a nasty piece of trading. The low here is 150.14, and that set up a buy signal. And the high of this bar is 151.20, and the next bar up, 150.21. The next bar here is 150.22. And I was saying on the earlier chart I was looking at, that was only 1 tick above the old high. I'll show you another instance that might be a bit clearer. But beware the 1 tick fill. That's why we always allow 2 ticks above or below the true high, true low in futures, and 5 ticks in Forex above or below the true high, true low for our entry point. And that's because in Forex there's no central exchange, and prices are created by various platforms and various groups of banks, and depending what part of the world you're in and what platform you're using, you can get significantly different prices for daily highs and lows in Forex. In any event, we move on here. Look how this market's just being held up by the blue line to 150.17. Little breach, comes back, tests it again, sticks through, does a key reversal bar here, and by now we're up to October the 27th, and I stuck a plus buy signal on there as well to make sure if you hadn't seen the blue line buy from the 2 days before, which is valid for 3 days, the blue line signals. Off it goes. Up here, outside bar, we're going to talk a lot more about these. These things are a wretched nuisance. In fact, they're the bane of all traders. They're the thing you hate most about trading, and but you have to know how to deal with them. And the technique we use is that we take every signal, but we have a mandatory stop and reverse if we get an outside bar. Now, for those of you who are putting on your orders and going off to work, don't want to be sitting there looking at charts all day, you can do this by placing your stop orders, and you can create a stop and reverse in the right sequence to do that. Anyway, up it goes. We get long again at the mandatory stop and reverse, $1,500 up, a plus sell signal for today, down it goes. So this is just looking on this chart, this is just looking at the signals that are available on the website. And as you can see, they're very, very good. You got every turn here that you wanted. You're with the trend almost all the time. And you don't, in fact, you just don't miss a trick. And they're just signals that came from the website. Now, these signals on the website are primarily created from price. There is a very small element of time in the TO3 signals, but essentially they're price signals. We're always looking for target recognition. What's not on this chart here is the blue line, which was at, for those of you who look at members charts, right up here, just above here where it created the signal. There's a blue line there at 154.25, and the high of that bar, believe it or not, 154.26. And the blue line stopped it like it was shot, gave you a key reversal bar, and then that set up today's sell. That wasn't a blue line sell because it didn't meet the criteria. There's various other criteria that I won't bore you with because I post these signals for you, and it's all in the website if you are interested in finding out why these signals work so well. So just looking at this market, this is US T-bonds. It's a very, very good market. It gives very clear signals. Every signal, this is, I started looking at this from October. The last 6 weeks, every signal that you were interested in, you got from the website. That doesn't always happen, and that's because there are some limits to the signals that are created with time. Most of the signals that are created with price, I should say, I'm getting ahead of myself. The signals that are created from price alone will give you all the turns, or should give you almost all the turns, but they don't fill in the middle parts of the trade. Okay, for that you need another technique, and I'm showing you that here. This is Aussie JPY Forex pair. Same thing from about October sometime, and you can see we started off just looking at the signals in black. They're the ones you got on the website, and you can see much the same thing here. Let's get my spotlight. Here it is. You got a TO3 buy signal here. You didn't get the sell signal here. You got a TO3 buy signal here, a TO3 sell signal here, a blue line and a TO3 buy signal here, and a TO3 sell signal below this low right there. So almost all of the signals you wanted on the turns came with your price signals from the website, TO3s, blue lines, and plus signals. But you missed this one up here. This wasn't on the website, but it is a time signal. And what I'm trying to show you here is this trading time signals, which is, to you, it's a comparatively new idea. To me, I've been working on it for 15 years, and I've been trading it myself for about the last 7 years. And these time signals are quite extraordinary because they fill in all the gaps. They fill in the blanks. You can see here, this was a time buy, this is a time sell, this is a time buy, this is a time sell, this is a time buy, this is a time sell. Down here, we have a time buy and a trend continuation sell, and that's ugly. But all outside bars, or not all outside bars, most outside bars are ugly. And we tend to use a stop and reverse protocol with outside bars, and sometimes you regret that. That's just a function of trading. You can see on this here, this was the got short sell, inside bar. Today we had an outside bar. Horrible. Outside bars are always horrible. They're the ugly. But have a look at this little trade here. This was a TO3 buy signal and a time sell signal, and it lost 12.5 points. It says pips here. This is Trade Navigator trying to be trendy. Albert, does the stochastic chart come into play? Yeah, it does when you're trading price, Albert. It's all about what the stochastics are doing. And not just this one. We use two stochastics, a fast stochastic and a slow stochastic, and a momentum indicator. When you're trading time, those of you who've done the tutorials recently, the stochastic doesn't come into play because time is stronger than price. So we have a stochastic actually on our time charts, but that's simply to tell us where to place our stops if we don't have a new time signal. Okay, have a look at what's happening here where I put my little highlighter. Here was the buy, here was the sell. It lost $110, and I put a note up here for you, and it says, I was right and lost money. And that'll happen in trading. Sometimes markets just don't have enough volatility to get out the way and give you a profit. You could have taken the view here, and I haven't thought this through. I can't actually remember how I traded this. But if you took the view that the trend was down, then this bar here would be a counter trend. And if you're trading a counter trend, you exit at the first profitable close. So you wouldn't have had a loss. You'd have got out of that and taken the sell the next day. But it is a reality of trading that you can be right and lose money. And I say to the people that I'm teaching, if you have to say, I was right and I lost money, that's fine, as long as you're sticking to the system. If you have to say I was wrong and I lost money, then I'm going to growl at you. Anyway, let me try and make it clearer for you. The difference between what you see on the website and a complete package of trading when you learn to trade properly and become an elite trader. This is Euro AUD for no particular reason. It just happened to be one that I picked on. And same sort of thing. It starts in early October. Big bar down. You don't get this big up bar here, and I'll tell you why. Because on the website is designed, spotlight, you don't get the buy on this big outside bar because it's outside the risk parameters that we have for the website. And the website is designed, it's optimized for defense, not offense. So you can start at the website with confidence and progress from there and do a tutorial and learn how to become an elite trader. So you got your sell going down there. You didn't get your buy there, but you got a plus buy 3 days later that got you into the long trade, because clearly this big bar was a huge overbalance of price and it turned the trend up. Then this market ran up. There was a black line at 15231 on members charts. Then this bar, I have the highlighter on, set up a TO3 sell for the next day, which was elected, and down it went. 14975, this was a Daniel code retracement number. Same thing, they're not fibs, they're not old highs and lows, they're unique numbers, unique just to the Daniel code. And that set up a plus sell, which again got you back with the dominant trend as up it went. Look up at the top here. There was a blue line at 15398. This high, Euro AUD, went to This high here went to 15393, 5 ticks away, and that set up a time sell. But again, you don't have a website sell there because it's way outside our risk parameter. To take a sell there, it means your risk on entry initially is down below this bar. And most of you don't know how to, well, those of you who've done tutorials know all this stuff. Those of you who haven't, we don't put up signals that have big risk parameters on them. I'm trying to give you the best signals and the safest signals. Where do you actually enter with the time signal? Daily highs, daily lows, Bill? Always. True highs, true lows. And Daniel code retracement numbers are the only valid support and resistance you'll find on a chart. Okay, so then anyway, it went down. This changed the trend to down. Trend had been up to this high. It's a variation of a blue line high. It's the blue line. Look what it does to market. Stops and bang. Not all of them. There are a number of blue lines. People often say, oh, you got so many numbers. Where do I know? How do I know which one's going to turn out? Well, I teach you that. And you need more than just a number. You need you need 4 other things to line up to give you a blue line signal. This wasn't a blue line signal, but it was a time signal, and it was also a plus sell signal. Was not posted because the risk was outside our parameters. Look what happens down here. We get a plus buy and a TO3 buy, and both of them fail. Okay, but they wouldn't have failed if you'd known the trend, and I'm going to show you that. So that's what you see on the website. Let's take it a bit further and show you. Here we are, all the trades. Now you see a different picture because we've got the skeleton comes from the price trades of price, and now we put on the time signals, and you now see we get every high and every low. And it's extraordinary what this trading time is revolutionizing lives of a lot of people. And you can see here, this is what happens. This is the difference between the trades on the websites, which have limitations to them, and what an elite trader would see by combining time and price. In fact, we can go a bit further than that, and we can show you why these trades here, how they should be handled. And why. So let's see if we've got that. Here we are. We look at this. This is the same chart. This is Euro Aussie dollar Forex chart. And we look at this shallow sideways move. And we had 2 buy signals in there. One was a plus buy, one was a TO3 buy. Of course, it follows that once you exit those trades, you need to get back with the trend. When I say to people, what's your job? The answer is get with the trend. Trend is paramount in all of this stuff, as I hope I'm going to show you. But nonetheless, if you knew here that the trend was down, which it certainly was after this bar right here. Let me get up this chart so I can tell you which one. That's October 27th, 1027. That turned the trend down. It's arguable, in fact, that the bar before turned the trend down, but that's quite a sophisticated approach. If the trend is down, these buy signals in a downtrend are by definition counter trends. And counter trends usually fail. So if you're taking a trade that at the time you place the trade appears to be a counter trend, as both of these do, you should have a more aggressive approach to managing your stops. And amongst other things, if you get a profitable close, you should exit. But you can also manage your stops. Instead of having your stops in the normal position, you can use a fixed dollar stop equal to something considerably less than the face value of the setup bar, or there are another number of other techniques that are the same or even a bit better. So the whole point is, if you knew this trend was down and the buys were counter trends, you took profits on both those buy signals because the sheer fact that the trend was down. So be aggressive with your stops against the trend. this presupposes that you know the trend, and I've been in this business for I guess a lot longer than I like to admit right now, but I guess it's sort of heading towards 28 years or something like that, maybe longer. I've been trading futures for 28 years, goodness. And everyone says they can tell the trend. Anyone can tell the trend when the chart's finished, but a lot of people can't tell the trend on the day it's happening. And that's terribly important in your trading, that you know what the trend is. There are various techniques, some of which I've talked about in these webinars, other of which I teach you at the tutorials. But you need to be able to determine a change of trend within 1 or 2 bars, no more, of the change occurring. And sometimes that can be quite challenging with small bars, as for example here. This is actually the date of this bar is 10/16. That's a Monday, so the next day is going to be 10/17. You should be able to tell that there's a change of trend on this second bar, 10/17. It looks difficult, doesn't it? But I promise you it is doable. Okay, let's move on. Here we are. Trend is the boss. This is the DAX. We've been having a lot of focus on the DAX lately. As well as which Frank DeBier, who does a lot of the For Seal work with me, he wrote a terrific article which is on the website still if you like to read it. He was highlighting how vulnerable the DAX was to a major correction. Frank, being a young man, is a bit more aggressive than I am. He'd say it's a bit more than a correction, but in my view, it's always a correction until it turns into a rout. Routes are very good. They're valuable things. Markets pay exactly the same going down as going up, but they do sometimes tend to go down a bit faster. And that's always exciting if you're a person who likes chaos, as I do, because it gives volatility to your trading. That's it. So have a look at this. This is very interesting. We're going to come back to this chart again. This chart is headed Trend is the Boss, and I've put up here, trend determines your stops policy. If you think you're with the trend, let me bring up this chart so I can give you the dates. Here we are. If you think you're with the trend, and certainly the trend's actually been up in this market forever. Chart I'm looking at on the other computer goes back to about mid-September. Trend has certainly been up all the time since then. You'd have been aware of that, and then you get this big booster of a bar on October the 26th, which is an overbalance of price, and you've been getting an overbalance of time since forever. So certainly, here the trend is up, and then we go up here and we get a plus sell on the inside bar. Now, inside bars are nulls or voids. Okay, now they're very, very important for forecasting. That's an entirely different thing. But for trading, they're a null or a void. They're the market's way of marking time, if you like, or running on the spot. Markets all have their own internal clock, and they're trying to stick to that time frame. And when they get ahead of themselves, they put in inside bars to lose some time. Now, when they get behind, they put in outside bars, which are sort of 2 days trading put together. I know there doesn't seem to be a lot of logic to it, but there is. So we had a plus sell signal on the inside bar. When you get a signal, any signal on the Daniel code that's on an inside bar, you always carry forward that signal, carry forward the last valid signal. So if you had a sell on an inside bar, carry it forward and execute it again the next day. Okay. Our website doesn't do that. It gets terribly confused about inside bars, but you need to be aware of that. Most of them are. On the bar where that sell is elected, which is the big down bar with the sign on it saying trend is down, that's November the 7th, and that does 2 things. The sell signal is elected, which means that the market went to the entry number that we had for it. And down it goes, which will be 2 ticks below the true low. You should know the difference between true lows and chart lows. Look over here, this bar right here, has a little green dot under it. This one has a whacking great big green stripe under it. That's just alerting you that there's a gap. And when there's a gap, the chart low is not the same as the true low. So for that bar there, where I had the cursor sitting, when you can see it, which is now, that bar there is November the 1st, and it has a chart low of 13311. But that's not the true low because you have to account for the gap. Don't get caught in that trap, folks. True highs, true lows are very important. But I digress, going back to where we were for November the 7th. This bar does two things. First of all, it elects the sell signal. That's fine. But it changes the trend. On this bar here, it tells you the trend is down. And if we think our trade is with the trend, we're going to try and hold it. Okay? The money in trading is made by holding trades for a number of days. That's why I keep showing you this. Actually, I'll come back to you, mate. This is how why I keep showing you charts with long stretches of trading in them, or long as we can get. That's where you make the money. Just trading a bar at a time. I was talking to one of my clients. I think it might have even been yesterday, Alan, was it? And he got into a natural gas trade and he made $2,500. He thought, wow, that's pretty good money. He took the money. He was talking about some trading earlier this week, and then, of course, the market just kept going and going and going. So getting out at preset targets or thinking the greatest mistake everyone makes is thinking what the market's going to do. You don't know, I don't know, and the good news is you don't need to know. Every time there's a completed bar on the chart, it has all the information for you about what you should be doing with your trading tomorrow. And that's the vital thing to remember. Nobody knows what the markets are going to do tomorrow. Every time you say to yourself, I think this is going to go up, or I think this is going to go down, slap yourself hard. It's rubbish. You don't know. We do not have the gift of foresight. Only God knows what's going to happen tomorrow. You don't know, and more importantly, I don't know. And if I don't know, you certainly can't know. Okay? And I don't mean that in a conceited way. I mean it that I've been looking for that message for many, many years. And the reality is, every completed bar tells you exactly what orders and where to place your stop tomorrow, what action to take. And that is all the information you need to be an elite trader. Right, so the trend is the boss. If you know the trend, you know how to manage your stops. If we're with the trend, we want to hold the trade as long as we can, but we never ignore a new signal, particularly a time signal. If we think we're against the trend, if we think we're in a counter trend, we want to get out of that trade as soon as we can. At the time we took this sell signal here, on entry, this appeared to be a counter trend. By the time the bar was finished, if you can't see this on the chart, this is the bar dated 11th of July, and this is the DAX futures chart. By the time the bar was finished, it was saying to you, this is not a counter trend, this is now a change of trend, the new trend is down. And that's the sort of information that's vital to your trading. Righto. The good, the bad, and the weird. This is the bad, guys, and there's two things here to keep your eyes out for this. This is the Russell. You can see there are two groups that I've put horizontal red boxes around, and what I'm showing you there is 4 closes in a very narrow range. That is really a symptom that the market is about to start consolidating. And consolidating can take many forms. One form it can take is just not going anywhere, which means it's dead or dying, and your account will be dead or dying with it if you keep trading that market. The other thing is it can tell you that this market's very disorganized. And look what happened after this second one. Outside bar, up, and down, sideways, up and down, 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 who knows? Okay, this is a market that's having real turmoil. It's trying to go down. It's got a whole lot of cross currents flowing through it. And the bad are outside bars. The other bad are consolidating markets. They're two things, one of which you can avoid, consolidating markets. If you know what to look for, one of the most obvious symptoms is 4, sometimes only 3 closes in a narrow range. If you think you're getting into a consolidating market, stand aside, wait for the breakout, and then start trading again. Markets tend to trend after periods of consolidation. It's a very good rule. As well as that, you shouldn't be trading one market. I know that many of you just trade one market. If you're doing that, you're in a huge disadvantage because you're committed to trading that market when it's a good trading market. That is, it has good vertical movement up and down. The other problem is you'll obsess over it. You have a losing trade, a trade you don't understand, you'll obsess over it because you've got nothing else to think about. You should be trading a number of markets, and that should be, even if you can't do that now, you should be aiming to do that. That's the sort of diversity that you need to enhance your equity curve. You don't want to be stuck in one market, folks. I know I did it for years. Everyone's done it, but it's it's a bad habit. And then finally, the weird, this is really weird. This is oil 2 days ago. And if you look at the smaller chart on the left, that's the daily bars. We had a sell for that market. Let me just get you the date. You can look at it on your own charts. Here we are. Here we are. And this is November the 8th, 2 days ago. That was Wednesday. And we had a sell signal for that day. Looks all right when you look at the completed bar. You say, oh, that's all right. It elected the trade and went down a little bit. But of course, when you look at the breakdown to the 120-minute bar, look what this rotten thing did. And John will enjoy this down at Coffs Harbour there. Here it is. This was the trade. This is the 120-minute bar. This inside the red lines. This is all Wednesday's trading. Down it went, elected you short, roared back up, stopped you out. Ouch is right. Down again, way down here. I mean, it looked pretty good when it was going down here before it turned. Way down again below, and then sideways, and then rallied. Okay, so why was that? Emotion. There's a lot of emotion in the oil market now. There's huge pressures both way on it, with trading and with fundamental news coming out from Saudi Arabia constantly. And this is one of the weird things. Sometimes it's with weird Wednesday in oil. And this is a weird bar. This happens. It's a cost of doing business. There's no defense against it. We'll see how it all pans out. But Wednesday, truly bad day, wasn't it, John? Nasty stuff, indeed, indeed. Okay, let's see what else we got for you. Here we are. Let's move on. And yeah, this is what we call good trading. Have a look at this, folks. This is the natural gas. This is the 057 chart, which is one of the continuous contracts that Trade Navigator provide. Most data services provide the same sort of thing. Trade Navigator's 057 version simply takes the front month and just slaps it on next to whatever the last month was. So these prices are accurate, but of course you get these huge on rollover. This little R down here in the blue triangle is telling you this is contracts due to roll over on that date, this contract here rolled over on October 23rd. And there was a huge premium on the rollover, and it went from the November contract into the December contract, which is what it's in now. And in fact, it's going to roll to the January contract on Wednesday of next week. Oil rolls every month, and so do some of the correlated markets, natural gas in particular. There was the rollover. Now, we can't post signals within 2 days of rollover on the website because our our trade program that tells you where to enter and where to put your stops defaults to the 057. That's this one. And then if there's a big gap here, if I tried to put up this sell, it'd be telling you to sell somewhere down here, way outside your risk parameter. So instead of doing that, well, there was a time sell signal here anyway, so you got short below the inside bar. You couldn't get short before that. That was the safest way to do it. And look at this lovely thing. 1, 2, 3, 4, 5, 6, 7 bars down into a TO3 buy signal and a TO3 buy signal. 1, 2, 3, 4, 5, 6 bars straight up. No counter trend. That, my friends, is the definition of wonderful. And you make an easy 2, 3, 4, 4.5 thousand odd just for off 2 orders. Quite sensational. Doesn't happen all the time. You need to know how to trade the tough stuff as well. And some of the reason you get the tough stuff is that you made a failure on your market selection. Have a look at this. This is the Canadian dollar chief, or Swiss franc, if you like, Canadian dollar pair in Forex. You can see the 2 earlier ones I've highlighted. If you just put rough as you like trend lines on those moves, there's a good angle on them. This is a market that's got good vertical movement. And then look what happens in early October. You get this sideways movement, this consolidation, and it's horrible. And consolidating markets are where you lose money. And let me see if I can find this particular situation for you. This is about October the 2nd. And it consolidates until October the 17th when you get the breakout. So here's the consolidation, which is bad news. If your market is consolidating, and look, the reality is you might have had this is a winning trade, buy, it's against the trend, you'd exit on that close. Made money. Look at this sell signal here. That's a sell selected inside bar. So you don't get a positive close. So this is what happens in consolidations. You lose money. But look what happens after consolidation. Wait for the breakout. There's the breakout. There's a sell signal on that bar right there, and down it goes. And look, you get good trading. 1, 2, 3. Big outside bar's a bit of a hassle. You can handle that, and it's big enough that if you bought that high and sold that low, you got all your money back straight away. And then you got a little bit of a push up here and then another outside bar. So your market selection is crucial to your success. If you can choose markets that have good vertical movement in them, they're the ones that you make the money in. And if you get into a consolidation, stand aside from that market. It's the simplest way. Wait until you've had the breakout and start trading after the breakout's completed, because it's usually pretty good trading. Correlations and counter trends. Most of you will know about correlations. Some markets are highly correlated. For example, if you're trading Forex pairs or currency futures, anything that's got the US dollar in on one side or the other has a 50% degree of correlation. If the dollar goes up, all those markets move the same way. If the dollar goes down, all those markets move the same way. Says nothing about quantum, but there's a degree of correlation there. And the Daniel Code Trade Program, which I'll show you so you can actually see it a bit more clearly than how I put it to you, it will tell you what the correlation is, and it actually calculates for you the degree of correlation excuse me, that you need to adjust so that you haven't got a concentration of risk going on there. And look here, if you just look at this chart, finish off with correlations. Some markets are so highly correlated that a signal in one can be executed in any other. Gold and silver and the Huey index are so highly correlated. You can have a signal in gold and execute it in silver if the trade is elected, and vice versa. All of the equities, Dow, Russell, Nasdaq, S&P, and the DAX, Germany's DAX, are so highly correlated that a signal in one can be taken in any other. This is the S&P, and what I put on here, I've shown you a NASDAQ. We had a sell signal in the NASDAQ today. The E-mini is obviously weaker than the NASDAQ. If you'd wanted to execute it in the S&P, you could have. But be aware, on entry, it's a counter trend. And you should have had a fixed dollar stop, or better still, a trailing dollar stop, because you're trading a counter trend. And look what happens with most counter trends. Okay? Here's 1, here's 2, here's 3, here's 4. All failed. Counter trends will fail in a strong trend, and this is a beauty, this trend, and it's been going a long time. So if you're trading a counter trend, be a bit more aggressive with your stop. Okay, now it's quite possible that you could start off trading what you think is a counter trend, and at the end of the bar you can say, oh, this has changed the trend. But the decision has to be made at the time you put on your entry, and if you are aggressive with your stops, don't go nuts. You get too close to the market, you'll just wipe yourself out all the time. But be a bit more aggressive. 50% more aggressive is fine than you would be if you thought you were trading with the trend. Okay, weird or understand? Have a look at this. It's the sort of thing that people say, God, this is weird. This is the DAX and on the left and the NASDAQ on the right. They both had Daniel code signals on them. One had a plus sell signal, the other had a TO3 sell signal. One had a good bar down, followed by another great bar down today. Look what happened with the NASDAQ. Trade was elected, down it went, came straight back up. Why? At the time of the entry, and still, that trade was a counter trend. Go back to the chart on the left. The trend was already down. The first bar down on the DAX, which we looked at a bit earlier, and that's the grey bar on November the 7th, that turned the trend down. The trend was already down. So this sell here, this is just simply a continuation of the trend. And that's fine. That's why that worked and this one didn't. Okay, if you had a trailing stop, this was all right. Whenever you get a big bar, even if it's a monster up one like this fella here, whenever you get an oversized bar, protect profit. You can use a trailing stop, but don't be too aggressive. But you know, if you used a trailing stop equal to about half what your normal risk on entry would have been, you made money before this thing turned around. As it turned around and stopped you out, you made a nice little profit on the NASDAQ sell today. Whereas if you didn't, it came right back up to say, chewy on your boot, or something equally weird. So that's why, you know, you look at some of these charts and say, oh, that's weird. Well, it is weird if you don't understand. If you understand trend, it's not weird. But I'm going to show you some stuff that is weird. This is not. This is just showing you a power of these blue lines. You can see this is the S&P. You can see it's been flirting with that blue line at 2592 for the last 3 days. It broke through it slightly. Then it came back, and on Wednesday it made its high. That's the bar before the outside bar. It made its high at 2592.5. The blue line's at 2592. That's 2 ticks, and there's 25,000 possible ticks in that number. 10 ticks in each. No, there are only 4. This is the mini works in quarters. There's about 8,500 ticks available. So it broke through it, and then it came back the very next day and made its high at 2592.50, 2 ticks away from the blue line. It's sort of like a kid that's gone too far and it's saying, "Oh, sorry, I want you to know that I know this number and I'm tracking it." And that's what these markets are actually saying to you all the time. It's really hard to understand until you've been looking at Daniel code charts for a long time. But markets are actually trying to tell you what they're doing. The problem is that if you don't understand their language, you don't get it. But look where this this is a huge momentum bar. Look where the low went to. The low of this bar is 2563.25 against a red line at 2562.75. Now that red line hasn't been updated. Excuse me. So it actually was a fraction higher, because when this was updated the last time was on Thursday night. So it's working from Tuesday's high, whereas in fact you can see what this market did today. It went a fraction high. You could have put a new retracement, Daniel Code retracement tool on there, and it would have hit spot on. But why would a huge high momentum bar like this stop and make its reversal there? Well, there's only one reason. 2563.25, Daniel Code support at the red line, 2562.75, 3 ticks. That's it. That stopped it. Like it was shot. Back it went. This was not a blue line trade. They did not have the other features required for a blue line trade. But you can see that even when it technically doesn't have all of those features, it acts in substantially the same way. Okay, here's one that's truly weird, all for you guys who want to see weird. This is soybeans today. Whoa, mad uprush. Very excited. Thought it was terrific. Got it all the way up to nearly to the black line. Let's see what that number looked like. It looks like it's way off it to me, but we'll soon find out. Here it is. The high was 1008 carat 2. That's a quarter. So it's 5 ticks off from that high at the black line and the blue line. Blue line's 1009.2. This is at 1008.2, a quarter. So it's 4 ticks away. It runs up, full of enthusiasm, turns around, drops the lot, lost its bundle. Look where it stops. The low of this huge momentum bar is at 983 carat 4, or 983 and a half if you prefer. This market works in quarters, 2/8. And 983.4, look where the black line is, Webby, 983.2. Okay, that's what stopped it. Markets run between these Daniel Code numbers all the time, almost all the time. What happened here? What was this mad panic up and down? Well, you had 2 announcements today. Your president, Mr. Trump, is in China, and he announced that China has agreed to buy an additional 12 million tons of soybeans. It's worth about $5 billion. That excited the market, and it roared up. And there was also an announcement that approvals for export orders of soybeans are just about to get harder. They whacked some more regulations on, and the market thought that was pretty dud, and down it went. So even without knowing all that news, look how these numbers have controlled those markets. And that one really is weird. Okay, I think that's probably near the end of it. I put this on just to show you this is a very disorganized market at the moment. This is the Russell, and I just wanted you to note how, look at the high and the low of this market. Today, the high of this market, 1485.4. There's the Daniel Code red line, 1485.5. That's 1 tick away, and look where the low went. Huge volatility here, up, down, back up again. Low today, 1461.5, and there's the red line, 1462.1. That's 6 ticks away. That's the only variance there. Quite extraordinary, isn't it? Nothing but the Daniel Code numbers do this, and that's given you, I hope, a good view, not only of the good, the bad, the weird, but it's also given you an idea, I hope, of why markets do what they do. If you want to be a super trader, join the elite and learn how to trade time as well as price. Give me a call. Send me your email me, jneedham@thedanielcode.com. jneedham@thedanielcode.com. I've learned that from Bill Riley. Say it twice. I don't know if it does any good, but I know he used to before he got the sack for some nebulous reason or other. And shouldn't say that, should I? I'll offend people. Anyway, I enjoyed watching O'Reilly. I thought he was great value. A bigot and an opinionated. But anyway, there we are. jneedham@thedanielcode.com. Send me your phone number, country, location, so I can work out the time zone and don't call you in the middle of the night while you're having a lovely sleep. And no matter how experienced or inexperienced you are, I'll be happy to talk to you about your trading and discuss with you the taking of a Daniel Code video tutorial, which are quite sensational if you want to become an elite trader. My fee for that is $7,500 US. So just be aware of that before you make that decision. Okay, free trials, folks. If you haven't already, you're very welcome to have a free trial of the Daniel Code website. Go to the homepage, click on the register button that's sitting there. And any problems, contact Kerry at support@thedanielcode.com. He'll enable your library, your access to the website and everything else. And if you haven't already got Trade Navigator, we can also arrange a free trial of Trade Navigator for you. Folks, this is our compliance statement. I'd like you to be aware of it. If you don't know how to trade, you can lose more than money. You can lose your backside and everything else as well. So I beg of you, if you don't know how to trade, learn to trade, and you can't learn it on the internet. Learn to trade, be a safe trader. Those of you who've done the Daniel Code tutorials are safe traders. The rest of you, be careful, exercise great care, please. Markets are dangerous if you don't know what you're doing. Okay, that's us for the day. Let me get out of here and let's have a look. Here we are. Hey, Marv, did you hear the music before this started? I was trying to play you the theme song from The Good, the Bad, and the Ugly, and I don't know whether you guys could hear it or not. Just type into questions if you could hear it or not. Let me know. That's about the end of it for us. Bill, where do you actually enter with the time signals? Daily highs, true highs, true lows, Bill. Can I check markets behave with moving averages? No, it doesn't work, actually. Moving averages are interesting. Displaced moving averages are even more interesting. And no, you can't make a trend determination tool out of that. Albert enjoyed it. Thanks, Albert. Appreciate you letting me know that. Marv, could, what would Marv say here? Yeah, he enjoyed it, liked it. He missed it. Okay. Alan, can I go over the dollar? Yeah, sure I can, Marv. Stepped away to get a bowl of popcorn. I was asking if any of you guys heard the music before the tutorial started. I was trying to play you the theme music from The Good, the Bad, and the Ugly. Mike Murphy. Mike, thanks, mate. You enjoyed it. Hey, Mike, it's about time we talked. It's been a while. Shoot me an email when you're ready. We'll have another session. Let's have another quick look at the dollar for Alan. This is what I want to show you, folks. This is the S&P. This is a 12-day chart. This is our long-term trend chart. Have a look what's been happening. We said 2393 was our first level. We've got some good resistance there for 4 or 5 or 6 weeks. Then the next number was 2485 to 2493. Look how it stopped at 1, 2, 3, 4 weeks. The next number is 2606, and we're not far away, are we? We're 2597 so far. So, be on alert. I think when they get some disappointing news, I think this is all this last bump up. You can see there's a big acceleration on the trend here. Angles got steeper. This is sort of a blow off. And I think a lot of it's hanging on the news about the tax file things. Right now, Vicky, you didn't hear it. I played it, and it was exactly that one. I don't know whether, maybe you just can't hear it, but it was Enrique Morricone, a fantastic soundtrack indeed. And I played it twice before the webinar started, hoping you could hear it, but obviously no one did, except me. But I enjoyed it. I had a good time. Okay, I'll try and find a way to play sound and some music for you, those of you who switch on a bit early. Steve Van Cleef. Oh, Clint Eastwood. Clint's my hero. Bill, anything with Clint Eastwood in it, I'm right into that. Okay, well, that's us for the day, folks. Thank you for being with me. And what's Lloyd saying? Run through the day index. Day index. What's the day index? Actually, no idea. DX, US dollar index. Yeah, I think I can. Just hang on a second. And let me see what I can do here. Let's see what we've got. Stand by, we're over time, but I'll do what I can. Hang on. Here we are. Okay. Right. Akshay. US dollar index. Here it is. Pretty interesting this, because look what's happened. If you look at the members chart, 95050 was the blue line. Here it is. 95050. That was the blue line. It's on the members chart. You can go there and have a look at it. Look at this. 9506. 9507. Wonderful, isn't it? And today we had, what did we have here? Blue line sell. You didn't get it because I don't think you subscribed to the blue line, the plus version. Actually, we had a blue line sell today, and there it was. It was elected and down it went. Has it changed the trend yet? Probably. Okay, we'll see what happens. This is a market that's suffering an awful lot of government interference at the moment, but it often does. It can handle it. So that's that. Okay, thanks for being with us, folks. Any questions you have, please send me an email. Lloyd, I see what you're saying. I shouldn't have to accept. I never have before. They just post it. Let's see if they can get sorted out. The rest of you folks, thanks for being with us. It's Friday afternoon here at 20 minutes to 1 in the afternoon. So I'm pretty well finished for the week. Enjoy your weekend. Enjoy the trading tonight or your tomorrow. And I look forward to talking to you when next we meet. Bye-bye for now.